Let's welcome in Manav Chopra as well. Now, Manav, let's start with the cement space first. ACC, Ambuja, Ultratech, how are they looking?
All these stocks, have given a very good formation, at least on the weekly perspective, the kind of a breakout that we've observed in ACC, Ambuja today, even Grasim, these stocks were preceded by a series of decline of more than 25% decline. And since they have bounced from a deep oversold levels, I sense the kind of a recovery that we've seen. In case if the key support levels are held, we could call it as a medium-term bottom in place. Specifically for Ambuja, 200 is a very strong support zone. And in case if there is a short-term dip, after such a correction, one should definitely look to buy this on declines. I expect at least a 38 to 50% retracement of its recent fall, which is actually giving another 15% upside for all these stocks at the current levels. If I have to pick one, definitely Ambuja stands out at the current levels. ACC, in fact, has breached its good consolidation move and also managed to close above its 100 EMA with record volumes. So, after such a move, there may be a short-term consolidation. 1450 to 1430 would be the levels where one can look to buy ACC on dips, but eventually I sense the targets for ACC would be close to 1600 levels.
Right, so that's the cement gains. And, before I come back to you, Pankaj, you want to talk a little bit about Alkem Laboratories? A bit of news coming out towards the fag end of the trading session. Not many minutes were left about how it's gotten, certain exchange report from the US FDA.
Right, so Daman is the main facility and Amalia is the facility, or in Daman where that facility is. Alkem had got 13 observations from this particular plant. 5 of them were repeat, and they were looking in slightly weak, when you look at the kind of observations. So they were slightly detrimental in nature. The street was actually going ahead and expecting that there would be a sort of warning letter, but that's not the case. It's got an EIR, which means that it's the end of the closure, and that's why you could see this 7% sort of a move which came in on Alkem Labs. On the other hand, you also had Idea Cellular and Antara, which was in focus today.
That's right, Idea Cellular. Let's bring up the intraday chart for you. Strong gains are being dialed in. So basically, Idea and Vodafone have given into the demands of the Department of Telecommunications and paid a little over 7,200 crore rupees to the government for outstanding spectrum dues, which means that they will get the final regulatory nod, and we will see the merger of Vodafone and Idea going through. So interesting times ahead of us, Pankaj. We're going to be down to just 3 telcos: Rel Jio, Bharti Airtel, and the new merged entity of Vodafone and Idea Cellular. And just a quick reminder to all of our viewers, on June 25th, we did see the EGM of Idea Cellular, where they took an enabling provision to raise almost 15,000 crore rupees and to change the company's name. So clearly, interesting days ahead of us. Let's just return to Manav Chopra once again. Manav, we've had the big bull Rakesh Jhunjhunwala on the channel. I don't know if you got a chance to see the interview, but he's talking about how the worst for next year has already been priced in, and the worst for next year is really being seen a result of the 2019 elections, which the markets may not favor. Having said that, the broader markets have not been participating in the rally as much. They've been underperforming the frontline indices. What's your view as far as the broader markets go?
The markets usually has this phase of sectoral rotation, which usually happens when the markets actually get into a consolidation phase. If we look at how the markets have been from May 2018, it was in a broader consolidation since it started, and there was some correction happening all across. So at every different aspects of the market, such kind of a consolidation and sectoral rotation takes place, and eventually once if the market breaks out, you see all the sectors moving together. I think the most important thing that we need to view is, now since the market has started to come into a new phase altogether, whether the underperforming sectors like a PSU banks or the pharmas or the mid caps index, they start showing some sort of a recovery, and whether that recovery will be sustained or not. If it happens so, then I think eventually the markets will get into a new league altogether. I sense for a very immediate area for at least 2 or 3 months, one can start focusing on the PSU banking space. I think that is one sector where we could see some sort of a momentum going forward, and be very selective in mid caps. And because mid caps have already seen a sharp decline, I don't recommend buying the mid caps aggressively at the current levels, but one should take action on a phased manner basis. I sense PSU banks should be the space to look out when we go for a high margin of safety.
And if you look at today's performance as well, in the end when we did see the markets recover, a lot of it was thanks to the earnings season. L&T, for example, really contributed to the last bit of the rally that you're seeing. A fantastic Tuesday turned out to be for the Sensex as well as the Nifty. Now, this is a show where we get experts to answer viewer queries. Every day once markets close, one of my colleagues, whether it's Aisha Faridi or Tanveer Gill or Avan Dubash, do a Facebook Live of the day that was on the Lal Street. We get a lot of viewer queries there, and this is the show where we get experts to answer them. So let's get down to it. Our first query that we're getting in from a viewer is Vineet Kumar Soni, who says, what's your view on Jubilant Food and Ashok Leyland? Manu, do you track both of these stocks? Ashok Leyland, of course, last week we saw some wild swings. Jubilant Food also was, under a bit of pressure once it came out that it's still under the observation of the GST for not passing on the GST benefit to consumers.
See, looking at the charts for the Jubilant Food, the stock has been on a very good up primary trend, and has been a good market outperformer. I sense, at least at the current levels, one should definitely maintain a trail stop loss to avoid any further losses. 1400 should be the stop loss for Jubilant Food going forward, and as long as these levels are held, I sense, one could also see the levels of at least 1480 in the medium term, long term perspective. So Jubilant Food will definitely be a hold. Ashok Leyland, in fact, has seen a series of decline from its recent peak of 167, and it has reached to its monthly, weekly support levels, and whereby we've seen a good bounce. A stop loss of 105 on positional basis is recommended, and one can expect a recovery towards the levels of 125. This would be a short term play, and one can continue to hold both these positions.
Okay, and the next viewer query that we're getting in is from Sandeep Sardesai, who wants to know about Rain Industries. Manav, what's your outlook as far as Rain Industries goes?
Actually, this stock has breached key support levels on the monthly perspective, and the overall trend has definitely turned negative. There is a bounce that is happening into the stock, and eventually I sense there would be series of resistance close to the levels of 200. I recommend that one should exit positions at the high levels, because 200 could be the levels whereby there could be some further selling pressure, and eventually, since the cycle of the stock is still on the bearish side, until unless we don't really close above 210, the medium term trend would not turn positive. So in such a scenario, I think 200 would be the levels where one should reduce their position or exit their longs.
This query comes in from Rahul Sachdev. He says, what's your view on L&T Finance?
Actually, the stock has seen a very good breakout on its weekly, monthly perspective, and the way the stock has managed to observe a good reversal, at least on the weekly, monthly perspective, with aggressive volume breakout, it definitely hints for much higher levels going forward. I recommend that one can not only hold this stock but also look to buy this stock on dips. 165 would be the key support levels on the weekly, monthly perspective, and in case if there is any short-term dips which also coincide with its long-term averages, I think one should definitely look to buy. The immediate target for this stock would be close to 195, and the eventual long-term target would be as high as 215.
Comes in from Champarathi Kanyapam. The question is that how will PSBs, especially Bank of Baroda, perform? Can I expect 150 plus soon?
Actually, it's quite possible, like I mentioned some time back, PSUs as a space is showing a lot of high margin of safety, and If you look at the chart of Bank of Baroda, you know, the stock has actually seen a series of decline from its recent peak of 200, and you know, there has been a good retest of its good long-term monthly support levels, and the prices are forming a good bottom formation. I sense as long as the levels of 120 levels are held on the long-term basis, I think you know, the stock would eventually start to recover and move much higher. One can also initiate long positions at the current levels. Eventually 150 could be the targets, but in case if 150 levels is also breached, one can still expect 165 levels. I think there is much more upside. Maybe another 20-25% is quite possible. The risk reward ratio is also very favorable. So most importantly, the last 4-5 days sessions of the Bank of Baroda on the weekly perspective has shown above average volumes of 50-day average, which is definitely indicating some good bullish bias going forward, and I sense a good bottom is already in place.
Right. Any picks apart from the stocks that we've already discussed?
Yes, I have two buy calls. My first call is buy on BEL. The stock has actually been forming a series of positive divergence on the daily formation, which indicates a trend reversal likely in the near-term perspective. Also, there is a positive formation with a breakout on the daily charts with volumes, which indicates, you know, validates the bullish setup. So overall, at the current levels, 102 can be the stop loss for an upside target of 115. And my second buy call will be on LIC Housing Finance. We have seen a good price reversal formation taking place into this, as the prices have breached its falling trend line drawn from its medium term highs, and the prices are also closed above its 100 EMA with above average volumes. I sense there is much more upside into this stock. A stop loss of 525 can be initiated on closing basis for an upside target of 585.
Okay, we'll leave it at that. Thanks so much for joining us and answering all of our viewers' queries so diligently. And you folks keep them coming in. We'll get experts to keep